So, governments are facing major challenges around the world when it comes to inflation. For example, the energy bills have almost doubled around the world, especially in the developed world, over the last 6 to 12 months. This is mainly due to the situation in Ukraine as a result of Russia's invasion. The cost of petrol and diesel is also at record levels never seen before. Food prices are going up because Ukraine, which is considered the breadbasket of the world, has very limited ability to be able to ship food. Also, we have a backlog of supply chain issues that are still impacting us as a result of COVID. So, when you put all this together, you would see that governments around the world are trying as much as possible to control inflation. Also, during COVID, a lot of money was printed by the developed world, and printing so much money would eventually lead to inflation. So, what the governments are having to do to control inflation is to raise interest rates. In the UK, the current inflation rate is 8.9%. In Germany, it's 7.9%. In France, it's 6.5%. Canada's inflation rate is 8.1%. The US is 9.1%. And Australia is 5.1%. Although these are the numbers that are produced by the governments of these countries, the actual real core inflation in terms of the fuel you buy at the pump, the gas that you need to heat your home, the energy that is required to run a business, the supply of materials, the inflation of all these goods and services is way higher than what the governments project. And my fear is that because a lot of people are already living either on or below the poverty line, this current inflation that we're facing would further drive people to desperate levels. For example, in the UK, it is expected that by February of 2023, the cost of heating your home would be about £3,000 a year or more. At the same time, while people are trying hard to manage the little resources that they have, the government has to raise interest rates to bring inflation under control. And at the moment, the government is not taking enough action to put a tight lid on inflation. As such, inflation is still running wild. Also, the other concern I have is that by the time the governments around the world have gotten a control over inflation, I do not think that prices of goods and services will drop to a level that we saw before the pandemic. As such, wages would not have risen in accordance to inflation. And if you're on a 1 to 2% annual increase and inflation is running at 5%, assuming that the current rate of inflation is capped at 5%, then it is likely that that 3 to 4% gap would be a struggle for most people. And what that would do is it would further drive people below the poverty line. So inflation is a major issue at the moment. It's a major issue for everyone, for companies, for investors, for governments, and for families and individuals around the world. It will be interesting to see how this one plays out, and I'm hoping that there will be solutions to kind of ensure that prices don't remain unnecessarily high over a long term or over a long period. So those are my views on inflation. So let's have a look at the performance of this portfolio for the past week. Last week, the performance was 3.82, and that is now 12.08. So this week was mainly a positive week over the previous week, and I'll show you a breakdown on the dashboard later. There have been no new stocks purchased over the last week, so the size of the total allocated still remains the same, although the equity has increased over the last week. So this week there are 4 stocks that are positive, and that is Unity Software, Rivian, Nvidia, and Apple. This week saw a jump for Tesla because of their quarterly report, which was not too bad considering during this last quarter they had a lockdown at their gigafactory in Shanghai. So this week saw an overall loss on this portfolio, dropped by over $2,275. The total equity increased from $28,000 to almost $31,000, and the loss on this portfolio reduced from 21% to almost 15%. And the performance over the last week over the S&P 500 is almost 6%. I'll show you that summary in other dashboards that I have created to make this presentation a lot more interesting. I've created this dashboard to show the performance against the S&P 500 over the past week, month, and year to date. Over the past week, we can see here that this portfolio had gained almost 80%, whereas compared to the S&P 500, it gained only 2%, an outperformance of almost 6% over the S&P 500. Taking a look at the portfolio performance over the last month, the portfolio is up 12.12% and the S&P 500 is up 4.37%. So the portfolio is outperforming the S&P 500 by 7.75%. Taking a look at the year-to-date performance of this portfolio over the S&P 500, we can see here that the portfolio is up 12.05%, but the S&P 500 is down 17.41% year to date. So the outperformance over the S&P 500 is almost 30%. Not bad going, and I would continue to review these numbers with you and find ways to improve the dashboard so that you can get as much information as possible from this video. So click on this video here if you're new to this channel to see what happened last week. Please like and subscribe to this channel as this helps this channel, and I'll see you in the next video. Take care. Bye.